Hey everybody, this is Ryan Mallory, and we're going to talk about the Snowflake IPO. Should you buy it the first day it goes public, or should you wait a couple days, maybe a couple weeks, maybe even a couple of months before you actually start buying this stock? We're going to tackle that and more in this video here. First of all, who names a company Snowflake? That's like the craziest name, but hey, whatever floats your boat, it seems to be working for them because they're about to raise $3.4 billion. They're also going to take another $250 from Salesforce, CRM, and Berkshire Hathaway, who is run by who? Warren Buffett. And you know what's crazy? In the past, he's tend to stay away from IPOs. And I don't blame him. But I'm not here to criticize Buffett or to applaud him. He's got a lot more money to work with than any of us, so that doesn't pertain to us. What pertains to us is whether we as retail investors should be buying this stock. Now, per CNBC, they're expecting this thing to come in at about $120 a share. That's even higher than what it was before, which was about between 85 and 110. There are a lot of retail traders. They're going to put a market order in as soon as this thing starts trading. Is that a good decision? No, I don't think so. And here's the reason why. It's because most of your IPOs that I have ever seen tend to do bad in the early going. Maybe not the first day. However, over time, they tend to pull back well below their IPO price. Or if they do take off, they tend to pull back at some point right back down to where they originally had their IPO price or much, much lower. So what I want to do is, because we don't have the technicals of Snow. Why? Because they've never traded before. So we need to look at what all the other hyped up IPOs have done, stocks that are in the similar category as Snowflake, and see whether or not it's a good idea to really buy IPOs, which for me personally, I'm not gonna touch it. I won't usually touch these stocks at least 2 to 3 months after they start trading. Why? Because I wanna see how it trades. Every stock has a little bit of a different personality to it, right? Walmart is a little bit less volatile than a stock like Datadog. And Datadog trades a little bit differently than Amazon. They all have their own different personalities. So it works for me, and I think it works for most traders to give it some time for it to settle in, see what kind of price range we're going to deal with, see whether or not we can get some areas of resistance and support, because right now we don't have it because it's never traded before. Now, one of the most hyped up IPOs of all time was Facebook. I remember when it came out, it was back in 2012. It was an absolute disaster. The first 4 weeks, it sold off nonstop. In fact, you could have gotten this thing if you would have just waited about 3 or 4 months. You could have got it all the way down in the teens. Can you imagine the kind of return you would have had by waiting for it to get down to like $18 or $19 a share? But look at this. When it first started trading, it went down week after week after week. And it had a little bit of a pop. That's kind of normal. But then it sunk right back down well below the original IPO price, formed a base, and then finally broke out. On this particular chart, the ideal time would have been a breakout of this range from 2013. So you had more than a year to get into Facebook at an ideal price, well below where it originally traded at on its first day of trading. And here's what's so crazy. So many people get very hyped up. They start seeing the price action, and a lot of times when it first starts trading, it goes straight up and everybody's like, oh man, I got to get into it. They get horrible fills because so many people are trying to get into it. So if they're trying to get in at like 120, it may not fill until like 126. So they're getting these awful fills on their trade. And then all of a sudden the rug gets pulled, and then they find themselves at $110 a share, then $105 a share, and it just keeps going lower and lower. You don't want that to happen to you with SNOW. Another stock that did something very similar was Alibaba. This was considered like the biggest IPO of all time. And what did it do? It went down straight for 4 weeks as well, just like Facebook. It did pop, but then it continued to drift lower and lower and lower. In fact, you could have got this thing more than 30% less than where it opened up at if you just have a little bit of patience. I remember back when Snap came out during 2017 and the retail crowd went nuts. They bought it up right at the open there. You could see it went way up the first day, going from $24 to almost as high as $30 a share. But then thereafter, the rug pulled out from underneath it. 3 straight weeks it sold off. It had a little bit of a relief bounce, but it went all the way back down to the single digits. This thing was a disaster as well. Let's take a look at Visa. I actually remember when this one came out. I didn't initially trade it when it went live, but it did have a nice rally, but it did it under some of the most unique circumstances during the 2008 Great Recession. It was bucking the trend before later that year it completely collapsed, going all the way as high as $22 a share down into the $11 range. Again, what is the common theme that we keep seeing here? There's usually some initial volatility, and then sometimes you have a little bit of a pop higher, but oftentimes you'll see a 3 to 4 week period of where it's very difficult to make any gains to the upside. And then you have a complete washout. It'll usually go lower than its IPO price, base a little bit, and that's your time to get long on it. That was the case with Facebook, that's the case with Visa, that's the case with Alibaba, and even Snap, which some people thought that stock would never recover from that IPO fiasco. Now, how about some software stocks? Shopify. SHOP. Again, kind of similar to what we saw with Visa. It had 2 weeks of consolidation, tried to bounce, and then it pulled way back down to $20 a share before it based, and that was well below where it opened up at, and then it finally took off. But a lot of times, you have 6 to 12 months before you really need to get into these trades from a long-term perspective. And with the stock market being as overbought, and with us being in the middle of a pandemic, social unrest, high unemployment, and horrible GDP, it may actually be the right move to pull back and say, hey, I'm going to wait for this thing to come back down a little bit, base, and then take off. Now, can I guarantee it's going to do that? No. And what if it just goes up and never ever pulls back ever again? Well, then guess what? There's another IPO out there that you can take advantage of one day. There's going to be plenty of them between now and the end of the year. So you're going to have your pick. Before I go any further, I want to tell you about the YouTube membership and this exciting new feature to where it goes beyond the videos. The videos are all going to stay the same. They're not going to change at all. You're going to still get the same great content in my videos. But throughout the week, you're going to get my personal watch lists that are updated, stocks and charts that I find very appealing, as well as updates on all the FANG stocks. Facebook, Amazon, Apple, Netflix, Google, Microsoft, Tesla, and I'm going to provide you with multiple updates throughout the week on the S&P 500, the NASDAQ, and the Russell, as well as some of my own personal indicators. So make sure to click join below, see which plan works for you. It's cheap, it's affordable, so make sure to join today. Now I'm going to the daily chart here. All the previous charts were the weekly charts. Now I'm going to show you a daily chart. Look at Datadog. Huge crowd favorite right now. It sold off 4 straight days after it went public, and this was a popular IPO as well. In fact, if you look at it from an even longer term perspective, you had multiple opportunities to get long on the stock. Even if you missed the initial run up early on, it still pulled back down and gave you an even better price to get long at. So you got to be patient with these things. And then you got Fastly. Oh man, look at this one. Same exact pattern. You get a little bit of hype initially, then it goes much lower than where it initially started trading at. So again, patience here. Patience is going to pay. Now what about rocket companies, RKT? This has been within about the last month that this started trading. And again, a good pop the first couple of days, but then it pulled back as well. Now the story's unwritten on this one, but if I had to bet, I'm going to wait for this thing to get much lower, below 17, probably even below 15, before I would even consider a long-term investment in this stock. We'll go back to April of 2019, where you have Zoom Video Communications, ZM. This one actually went against the grain of what you saw a lot of IPOs do, and that is to rally impressively for the first few months. But even then, it came back down slightly below where it originally started trading at. And you could have gotten in right there before it went on this crazy run. Now, what about Carvana? Again, it sold off for about 4 straight days. And then it popped, sold back off again, back below where it originally started trading at. And then it made its meteoric rise. I mean, this thing has gone crazy ever since then. But the constant theme in every one of them that I showed you, and I'm not just picking and choosing them, I'm looking for the stocks that have similar characteristics, maybe not all the same characteristics, but share some characteristics to what we're seeing with Snowflake here. And that's them either being a super hype stock, one of the biggest IPOs ever, or a stock that's in the same industry. And I've covered all of those. And the constant theme in each and every one of them is sure, you might be able to make some money the first day of trading. You're gonna have a lot of issues with slippage and execution on the first day of trading. So for me, it makes more sense to say, hey, you know what? Let everybody else trade this thing. I don't need to get into it. It's a great way to lose money. You can't really control the risk that well because there's no price levels to decide where to place your stop loss at. So give it some time. In most cases, you have somewhere between 4 to 12 months before you need to get long on the stock. So let it come down, let it settle in, and in almost every case, it goes below where it originally started trading at. If you enjoyed this video, please make sure to like and subscribe. I'm going to continue to put these videos out every week for you, but tell me down in the comments below, what are your plans with Snowflake here? S-N-O-W. Are you going to buy at the open? Are you going to do what I'm talking about? Wait a little while? I think it'll probably make a good long-term investment, but you need to make sure you get the right entry price, wait for it to come down, be patient, and then get long thereafter. That's what I'm going to do. Tell me what you're going to do in the comments below. Again, make sure you're liking, subscribing, getting those notifications. Thank you, and God bless.